Hey everyone, something really big happened yesterday, and it's something that we've been waiting for since March 2 years ago. If we haven't met, I'm Gary Nims with the Gary Nims Group at Windermere Real Estate. I've got some exciting news to share with you. So the Fed just announced a 50 basis point rate cut, and that's huge because the general market had only priced in 25 basis points. So last week and this week, I've been keeping a really close eye on the CME Federal Watch tool. And if you've seen any of my other videos, you know I've mentioned this tool before. It's a tool that institutional money managers and other financial professionals use to gauge what the Fed is going to do with the interbank lending rate. So for the past 6 days, it's showed about right around, give or take, about a 67% chance of a 50 basis point reduction. So the general market had only factored in 25. Well, yesterday, just after 11 a.m., the Fed delivered on that 50 basis point cut. So a quick note, you may be thinking, oh my word, I got to go in and get refinanced, or I got to go buy right away because now rates are half a point lower. Doesn't quite work that way. So the rate that the Fed adjusts is their lending rate to big banks. They call it the overnight federal funds rate. Mortgage rates, they don't instantly tick up, or they don't instantly move lockstep with that. In fact, right after the announcement, mortgage rates kind of ticked up slightly. So, but over the next week or two, we're going to see that 50 basis point reduction kind of trickle into the mortgage market, more likely the 25 that wasn't necessarily expected. And I'm going to show you a chart in just a few minutes, show you how it works. But giving buyers it's just going to give buyers a little more breathing room, we expect. And in the springtime, I'm going to tell you a little bit later in this video. I'm going to keep this video short, but I'm going to tell you a little bit later what's going to happen. So what does this mean for the real estate market as a whole? The short answer is this: we might not really see the full impact until early spring of 2025. So let me explain that. The last time the Fed raised rates was back in July of 2023. So then you fast forward into the spring of 2024, when interest rates had finally stopped their kind of steady upward climb. The market was on fire in the spring of 2024. I'm going to show you in this chart in just a minute. There were multiple offers, home selling over the weekend, home selling before the weekend, appraisals waived, escalations, what a lot of buyers would call bidding wars, were happening. But by May, things cooled off pretty fast with our seasonal slowdown. So I'm going to share my screen with you and show you what happened. Okay, so I'm sharing. I want you to see. Here's the spring market now. This is this interest rate. This chart. You got interest rates right here, and this is the average monthly interest rate. These are the median closed sales prices. Now these are for the East Side, and I could do all this for Seattle as well. But right now, focus on the East Side numbers. So the principal and interest payment based on the median price with a 30-year fixed interest rate, here's your payment, okay? Now, let's look at median price real quick, okay? Between February and March, we had something historical happen. We had over a $200,000 median price increase. It's never happened before in the history of the MLS, keeping track of all these numbers. Believe me, I know, because I kind of geek out on this stuff. So anyway, look what had happened to payments. Average payment went from 9,500 to almost 11,000. And then ensuing April and May, we're cresting over 11,000. And then median price started to drop. Interest rates started to drop. Our seasonal slowdown started to happen in the summer, and it actually moved up it moved up sooner than we normally see it. Kind of started in May. Okay, but here's something I really want to bring your attention to. Look at this, August of 2024. Okay, average payment about 9,500. Average payment about 9,500. Look when the other times, the comparable payments here, December and January. okay, when we had lower prices, okay? So payments coming down. So I want you to keep that in mind. But let's talk a little bit about what I expect in 2024. I'm going to stop sharing here. So if 2024, I'm sorry, 2025. So if 2024 is any indicator of what's ahead for 2025, this coming spring could be an absolute seller's paradise. For buyers, really just the opposite. So where's the opportunity in the market? The biggest opportunity right now, the biggest opportunities for buyers. And I'll tell you, just in the last 2 months, my buyers have gained a cumulative of over $238,000 in instant equity. Well, what I mean by that is their appraisals came in higher than what they paid for their homes. So now sellers don't always love to hear that they misjudged or misplayed the market, but these folks did. And we just keep that little bonus to ourselves when we're in the transaction. But this window of opportunity, let's get back to that. This window of opportunity started in June. It's likely going to close by October. After that, we're going to hit what I call garbage time. And you've heard this term kind of from sports. You're watching the game. The outcome of the game's already decided. There's one team that's way ahead, but the clock's still running. They're still playing the game. Well, in real estate, after Thanksgiving, inventory kind of dries up. And what's left, just not the most appealing homes. Quality and conditions, not what buyers are typically looking for. So it's just natural to check out on the market, unless you're a house flipper, but that's different. So your best shot of a purchase is between now and Halloween. And once we hit the early spring market in mid to late January, I expect us to have a really wild seller's market because these rates are going to continue to come down. They might come down by 50. There's a whole group of economists that are thinking we're just going to see 25 basis points from here on out. I'm a little mixed, but your best shot is going to be between now and Halloween. So I expect once we get into the spring market, you're going to waive inspection, or you're going to be paying for pre-inspection. You're putting money into houses you don't even own just to inspect them. You're going to offer to cover any appraisal shortfall. You're going to compete with escalation clauses. For some, it's not even a market that they have the ability to buy in. And then for most, it's not a market that you will enjoy the process, that's for sure. So wherever you are in your real estate journey, just keep these things in mind. Remember, markets are always shifting. Every neighborhood has its own unique trends. If you got specific questions, I'm here for you. My favorite part of this job is helping my clients feel clear and confident about their next steps. After all, your real estate journey is all about you. Thanks for watching. I'm Gary Nims with the Gary Nims Group at Windermere Real Estate. Take care.